Now for our final panel discussion for the day. That will be focused on startup growth, raising money and growing teams. Moderating this panel is Mr. Rashid Sultan, founder and managing partner of Savor Ventures.
Hi. I'll start by introducing the subject, then I'll ask the panelists to come out. According to ArabNet Business Intelligence, 5% of total investments made in 2016 were over $7 million in value, and only 9% of MENA's equity investors provide growth stage investment. Growth capital is critical to startups to scale, allowing them to invest further in product development, new market expansion, and team growth. That's going to be the topic of our panel today. I'd like to invite Carlos, Idris, and Abdulaziz to the panel, please. Sorry. And Eric, my bad. If we can start with each one of you giving us a little brief about your business and who you are, and then we'll ask a few questions.
Okay. So, hello. Can you hear me? So my name is Eric. I'm the CFO at PayTabs. PayTabs is a payment gateway processing company. So we process payments. We process for CyberSource and MIGS. So we have Visa and MasterCard. We also process for Sadad, Benefit in Bahrain, and soon to come KNet in Kuwait. So we are in business for the last 4 years, and we have raised $20 million capital. We have now a team of about 70 people.
Carlos?
Yes, Carlos TV, CEO of ICFlix. ICFlix is the online streaming company founded in 2012, focusing on Hollywood, Bollywood, and Arabic content, covering markets from Middle East to North Africa. Not only we do acquire content, but we also are doing original production as well.
So I'm Idris. I'm the founder of Fetcher, founder CEO of Fetcher. Started the company about 5 years ago. What we do, for those who are not familiar, basically we believe that the world doesn't have an address, and we believe that the whole world is going mobile, and we try to deliver to the mobile. It's that simple, and trying to solve that, especially for e-commerce company. We are not present in 6 markets. We're about slightly over 2,000 people right now. And we raised $52 million of funding, including the last one of $41 million about 6 months ago.
Well done. So my first question would be, how much have you raised and across how many rounds? It's important for people to understand in the audience that as a startup, there's rounds. If you want to talk about that, Eric, first.
Okay, sure.
Yeah.
So, as a CFO, I'm very well versed in these kinds of funding names and terminology. So the first comes the seed capital.
Okay.
So this is when the founder usually put his own money and develop the beta version and set up the first version of the product. Then you have angel investors. Then comes Series A, then Series B, Series C, etc. In PayTabs, we've gone through the process and we've reached Series B today.
Hold on.
So seed capital was the founder, Abdulaziz Al-Jouf. Then came the angel investor, Aramco, Wa'ad Venture Capital. And the Series B attracted a series of investors in the area of private equity, mostly family offices and private investors.
And how much total funding have you raised so far?
Till date, we've raised $20 million.
Well done. Carlos?
Yes, so ICFlix is privately funded. We have raised internally among myself and my partner about $35 million. not yet open. We haven't really entertained any Series A or Series B yet. We may either go that route, starting to raise capital through venture funds, or by listing the company on certain stock exchanges in the region. So these are the two options we're entertaining right now, but depending on the landscape, obviously we'll go with either one.
Idris, I know you mentioned how much you've raised so far. If you can tell us what round you're at right now, or you've reached, and how difficult was the funding process for you?
Yeah, we did the seed funding at 1.5 million, Series A at 11 million. That was led by NEA, so Silicon Valley funds, and then a couple of funds from the region, Saudi, UAE mainly. And then we just did our $41 million round, led again by NEA, so New Enterprise Associates, and Majid Al Futain. Right, so I mean the way you approach a US fund is fairly different than how you approach local funds. When you approach like a Silicon Valley fund, you always have to convince him on the business, right? You still have to go through the same step of projections and CAC, LTV, and all this stuff. One of the key things is that you have to sell him on the region. For example, three of the funds, so we have Winklevoss Capital, Triple Point Capital, and NEA, so three funds from the Valley, from the US. We were the first investment in the region. So I literally remember, so if you're doing this right now, like literally the best way is to have like a Dropbox folder that you have like all the typical things, but you also have like what is Dubai? Okay, because they have a distorted vision about what is the Middle East, what is Dubai, what is Saudi Arabia. And a lot of these VCs have hundreds business plan on the table, right? So why they would choose you that is 16-hour flight from where you are compared to something that is right around the block? So you need to help them do their job, right? So you need to give them as much information as possible to be able for them to make a decision. And educate themselves. There is a lot of education that needed to happen. So it was a painful process. And again, like the fact that we managed to get like three guys or three funds doesn't mean that we only talk to three funds, right? So there is a lot of no, and the ability to handle rejections and going back to the valley to try to pitch and more is critical. But yeah, so it has not been an easy road.
And has that process gotten easier as you've gone through the rounds?
No, it's not. No,
not at all.
No. So and that's what I found. And like when we did the Series A, we got the lead from the Valley, and we thought that everybody would jump in. And it was just wrong again. I was wrong again. No, it was very difficult. And now, so like it's slightly raising local money. It's slightly easier now because there is a lot of private equity money that have fewer deal flow. I would say a smaller deal flow. So they're fairly happy to go into this type of investment, especially since, I mean, everything that we heard of today, right? They're looking into tech, they're looking into growth, growth capital. But it's still not easy, right, to raise from here. It's still a challenge.
So two questions. Firstly, of your seed investors, have any of them doubled down? Secondly, why do you think the investors that invested in you specifically? Have you rationalized the reason for their investment? Is that something that you care about?
So for us, no. The initial investors did not all double up. Some of them did. I mean, one of them did, since there were only two in the first place. The difficulty of raising capital we don't see as much on our part. In fact, when we raised our 20 million round, we had oversubscribed by about double. So we were in a position to choose which investor will come to the table, and we were choosing the investors who would add the most value to the table. So I didn't see the same difficulty, and maybe that's because we try to avoid venture capital. We try to avoid venture capital because they come with very small tickets and they come with very high requirements. we tend to focus on private equity, family offices, because they buy into the dream and not into the nitty-gritty of how we do things.
Okay. Carlos? And if I may just add, I think the key reason we decided not to tap into investment funds about 5 years ago, because there was no appetite for individual firms to invest in companies or media tech, as we'd call it, that the industry we're in at that time. Today, the environment has changed, like our colleague was saying here. There's a lot more appetite to invest in technology. I think it's a lot better, the landscape from an investment or seeking funds in the region than it was 5 years ago, definitely. And that's really where we decided to actually tap in our own local, I'd say, community of investors at that time privately and fund the business and the venture without losing losing a lot of equity in the company. So now moving forward, I mean, the options I think for media tech or high tech industries are a lot better today from a landscape for investors than it was 5 or 3 or 2 years ago. So hopefully that will help us and other people seeking investments.
Yeah, I must say we are in the good times now. Try to raise capital in 2008 and you will see what it was. We might come to another 2008 soon, but in the meanwhile, especially now, I concur with my colleagues, raising capital in the fintech startup arena is quite easy.
So take advantage of that for this year.
Correct. And just to add, actually, investment just 4 or 5 years ago when we used to approach investors, they would right away tell you, we only invest in established business, we only invest in businesses that we can touch and feel, whereas technology, e-commerce, online, it's not a cup of tea. So we had 2 options, either to go abroad, Silicon Valley as an option, or Europe, for them to understand what we're trying to get into. But the Middle East was really off limits at that time because investors did not have the appetite to just venture into these type of companies. But today the landscape is totally different. I would say it's gotten a lot better for investing in high tech or e-commerce or online.
Idris?
The question was that exactly?
So the question is, your first investors, did they double down?
Did you double down? Yeah.
Yeah.
And whether it's important for me, right?
And then what do you think is the reason that investors invested in Fetcher? Or is it something that you rationalize or?
Yeah, so I mean, look for, so I mean, I don't know like your stories, but like for me, like the seed funding was a lot of guys that tried to put like $50K, $100K. So it was like really like, I don't know, I would call like a struggling ground, right? It's just like take whatever money you can and just like try to make the company survive so you can reach the next level so that you can raise a real round. So I don't know, that was my personal story. So it was not like real strategy at this point because when you receive like 90% of no's, it becomes difficult to get a strategy on the 10% that might say yes. The ability of double down was not critical. A lot of them, so from C to Series A, I think we got a lot of people that could not double down. I think we got only 3 or 4 that actually invested in Series A. But this is what I expected, right? The valuation was completely different. All my family was maxed out, all my friends were maxed out. There is no way they can follow with a Series A valuation. So I found it normal. Series A and B, also we had a big switch in valuation, actually quite a lot. So we had like 2 or 3 guys only that doubled down. Whether it's important for me, it's not really. I think now it becomes a little bit more important as you're going into like late stage capital. I think it's more important to have to choose someone that can actually get you for the long run and like can write like $100 million check or something like this. But it was not important in my previous because you can, so for example, and he was here, Riot Ventures, amazing fund. I know that they cannot follow for the next round, but they helped me deeply when they invested, right? So you have to choose your capital based on what you need at that time, right? That's a good example.
Okay. So I want to switch tracks to growing your team, right? Because key to success is not fundraising, it's actually building what you're trying to build. And you can't do it on your own. What are your lessons learned? What advice would you give the audience and startups in the region about building your teams? Should we start with Idris and walk this way?
Yeah. Building the team is difficult. It's very difficult in the region. I mean, we've had lots of issues. I think the main issues that we had is especially recruiting like tech developers. Nothing new, but I think it's extremely difficult to find really good tech here. And if it's available, it's extremely difficult to retain. So this is like a little bit the problem. So like all our engineers are in the eyes of like all the big corporates that pay like 2 or 3 times as much as what we pay. So it's very difficult to retain talents. So attract can be okay, but retain is extremely difficult. And honestly, we have not cracked it. Right? We're trying to put our development center in like different places to make sure that we diversify the risk rather than we solve it. Okay, because I don't think there is any real solution. Obviously, like, but they're happy to work with. They make sure they incentivize with ESOP. But this is already there, right? We have now the salaries are going up, so it's slightly better, but still is one of our key challenge.
Yeah, absolutely. I'll actually just add on that we face almost the same challenges of finding qualified technical or engineers in the region, which made us actually diversify and actually open up a development facility out in Eastern Europe and one in Egypt and one in Morocco, just to attract the talent that's in these markets and with proper, obviously, training and guidance to diversify our risk. So that's a key challenge, key risk for our tech startups. And it's not because there are no talent, I mean, there are no universities educating people in engineering, no. I think it's because the industry it's not yet mature enough from a high-tech industry in this territory. Once we get to a mass of companies and venture putting their funds and taking risks like they do in the West, then I think you see more and more industry creating a proper high-tech or technology industry that will facilitate the growth of resources tapping into those engineers rather than going out to the West to get better jobs, let them stay home and actually get trained on all these latest and greatest technologies for others to hire them. Today, you always tend to hire people from abroad, 50 to 60% of the time, to bring them into the region. Once you bring them here, retaining them becomes another challenge, and that's where we lose most of our staff because other companies, like rightfully said, will come and give 30, 40, or 50% on that specific individual, and then you'll end up losing that individual. And that's then when you have to go and tap to the market, you face the exact same cycle over and over again. So I think, personally speaking, it's looking good, but we need the venture, we need the funds that are in the region to actually start taking more risks into companies like ours to create an industry, a relevant industry, to have not only the whole socio environment of that industry to support us and others.
So for us, there is two different stories. So you have the story before the Series B and the story after the Series B. Okay. Before the Series B, it was very difficult to find talent, let alone retain them, because of the budget. There was not enough cash, there was not enough money, so salaries were very low, and it's difficult to find the right talents at this level. After Series B, it's a whole different game. Money is there, there's no problem recruiting, we recruit by the dozen, there's no problem retaining, we have a problem of building teams. Because when money flows, the people start flowing, and building a performing team from scratch or from a very small base that grows very fast is the most difficult task any startup would face.
If I may add one point, if you compare our region to the established industries, typically a startup would always pay more than an established company. So if you go to work for a startup in California, for instance, as a tech startup, you'd actually guaranteed more salary than you'd work for Google, per se. And the reason is because there's a lot of fund behind that, supporting those startups. They can take and they can attract talent. And this is where what I said, the link between funding and talent actually goes hand in hand. When you have good enough fund, you'll attract a lot of talent to come to you, or actually even universities to start pushing their candidates to go specific technologies that those companies would require. So just
Okay. So in your management teams, do you have an individual that focus on human capital?
Yeah.
All three?
absolutely, yeah.
And one question with regards to that. So as you've grown your businesses, have you had to adapt your management leadership skill set in order to keep, retain, and attract more talent? And how does that differ? So what are the challenges or struggles with that?
So the challenge here is to grow from a startup to an establishment. In the first few years, you're a startup, you manage ad hoc with whatever resource you can find around. When you go through Series B, you start building an institution and a corporate structure. So you start having executive committees, you start having real structures, process and procedures that goes along with hiring the top management coming from a diverse and very experienced environment.
So when in your kind of in your journey did you actually put together a human capital function then?
So the HR function came maybe, I would say, 6 months ago.
6 months ago.
Yeah, which is very recent. Yeah. And we are in business for the last 4 years.
Yeah.
So that's when you can afford it, basically.
Carlos?
Yeah, I'll be honest, actually HR or HCM, from a human capital perspective, we took that role seriously about a year into the business. And at the beginning, because you tend to do the hiring yourself, every individual, even from a receptionist all the way down to the engineer, you do all the hiring yourself. And then once you get to a specific mass, then you realize, oops, I may be missing out on some rules or laws or what have you. And that time we invested in that particular function, and we realized it's extremely important because that function not only actually governs the whole human capital that you have, but also actually it helps create motivation where you sometimes tend to fall behind because of a lot of things going on. So it creates an environment, more mature sense of environment for the individuals that are joining a startup. I think that was a key accomplishment once we had that. Now, to add to that, management was key also. The managers not only have to manage people just in a normal, traditional sense, but especially in a tech environment, you have to make sure that whoever you hire as a manager to lead a specific team actually understands what the individuals are working on and provides the toys, what I call toys, meaning the tools and the latest and greatest cutting-edge technologies to keep those people, individuals, motivated and to give them the sense that they're continuously learning and advancing their skills in the latest and greatest technology. And that's where you see ICFlix. We try to always brand ourselves as a technology rather than a traditional streaming company. And that's the key role of the management. And then comes obviously other factors that are beyond your control, such as someone coming in and offering 50 or 100% extra. Believe it or not, some individual will not take that extra job or additional job. Some will do, some will not, because of that management style and that HCM investment you've done in your organization.
Yeah, I concur. That's why I say that it's easy to retain people, because as Carlos said, if you have the proper structure, even if they get 100% salary in an environment where it's not conducive, and they see how they can achieve things in our environment, they will not leave.
Keeping an engineer with you happy and motivated is probably the most challenging task you can ever face, because an engineer not only looks for money, but also looks for, like I said, the tools, the toys being the technical, latest and greatest cutting, laptop or operating system or whatever language they're working on, etc., etc. So, and the manager that runs that shop needs to understand all this very well. It's not really just giving them traditional stuff.
So for us, one of the key things that we learned when we introduced a read HR function, which was about a year ago, so we did that pretty late. It was because we found that there was we didn't have the same standard with regards to the Dubai recruiting versus recruiting elsewhere, right? So as we were present in 6 countries, we found that when we were traveling that the guys were not sometimes up to par. So one of the key things is standardization, right, that you really brought. And we had tons of issues, and now it's finally getting solved. And being able to actually have someone you can really rely on in any of the hubs or countries or is critical, and that HR brought to us, because we had a fairly good grasp of the people we're recruiting into our HQ, but very less so elsewhere. So that's one. And then I think to go back to retention, I think for me, when you look at what makes people stay in a company, so one is salary, but definitely like it's only one element of the equation, and it's not really the key thing. And but two is recognition, definitely, and then three is learning. So the ability to actually brought employees, on the on the top of the, getting them some spotlight on what they did. For example, like we have recognition programs for like best drivers, best developers, that kind of stuff, and they love it. I mean, it might sound cheesy, but it's just crazy, like how much impacts them, and how much impacts like every employee. So that's critical. And then I think four, this is one of the things that I learned in the past like 6 months, literally, is gamification. Honestly, like in our job, like it's crazy how people want to see their name on top of any list. And it's just whatever it is. You're talking about developers, you're talking about drivers, you're talking about commercials. It's just crazy. So being able to gamify the targets is, I think, the next big thing, because it's just, I can see the impact, and it puts monetary contributions way further down the line.
So one important aspect of growing a business is the culture. So I just want each of you to give us, a sentence or two about what you believe the culture of your business is, or what you want it to be.
So first thing is the culture is the name. So we call our team the Paytabbers, and we are the Paytabbers community, and we have the WhatsApp group which is called Paytabbers, where we share everything and anything that's happening in the company and outside the company. They create that sense of community. We have a startup atmosphere at work, where we have pool tables and darts and PlayStation.
I'm going to ask you, do you wear a suit at work? I
do, but I'm maybe the only one.
Okay.
That's because I'm coming from a banking industry. But anyway, everybody else is coming at work in Crocs shoes and T-shirts, especially the founder. The atmosphere is very casual, and we focus on the community, and we feel like we're part of this family, and that's real. It's easy to say, but it's hard to achieve.
Yeah, I think key thing for us internally is transparency. One of the key elements of our culture is being transparent from the top down. We love to create a sense of ownership with every single associate that we have at the company. And we love them not only to have to be transparent with, and everyone to be transparent, but also to make them feel that they're actually owners in this venture that we're all working on. And we do provide, for example, everyone what we call stock options or even equity shares in the company. Probably one of the few firms in the region that does that, where we create, that's our way of rewarding our associates by telling them, this is what you are building with us, and as a result, you're a partner in this, whether success or failure. That's one. The third thing we love to do is obviously it's an extremely casual, open environment for everyone, and we encourage everyone actually, after they spend a specific time in their existing role, to actually go around and take on multiple hats as to grow and progress within the exact same environment. So it's a transparent sense of ownership, plus an extremely open, casual environment to work in.
I mean, yeah, for us it's very similar, right? Like we have like two values. One is self-drive, and the other one is trust. So so it's very similar, and I think it's fairly similar across startups, right? Because technically, as a startup, everybody has to behave like he's the owner. So I think that's one of the key things that is not really. I mean, you can see that this is fairly similar. But we are extremely. I mean, we're very relaxed, like work hard, play hard, type of stuff. Where like you can work from home like one day a week, that type of stuff. We try to, I mean, we understand that people have like different requirements, but everybody works hard, and at the end, I mean, it pays off. Definitely does.
Great.
To answer your question about the suit,
yeah, please.
One day I came without my suit, and people complained, "You're the CFO, you should wear a suit." So I'm the only one, basically. And with my colleague Muhammad, he's coming from the banking sector as well.
Do we have time for Q&A? Do we want to do? Yes. Any questions from the audience? Raise your hand. Questions? There we go.
Hello. Hi. The question is how stock option helps in growing the teams and retaining the teams with your experience?
Sorry, I didn't get that.
Yeah, I'm sorry. Either you got to come forward. We didn't hear that.
Okay. How is the stock option and the equity shares that you provide for your tech team or the team that you're working with helps in retaining them? Does it make a difference, or it is right now like a norm that everybody is doing, so it does not make a difference?
Yeah, I think I heard you meant how is the stock options or equity?
Yeah, helps in retaining the teams.
Yeah, you know, honestly, we feel that it's part of the whole equation, especially in a startup where you create a sense of ownership with every person you're working with. It not only helps in retention, but also makes the individual, when you work for something that you partly own, you'll do your best to make it look the best or give it your all, let's say. Because at the end of the day, if it's successful, you are successful. If we make money, you make money, kind of. So yes, it is part of that retention scheme. It's not the only, obviously, scheme. It has to be combined with transparency. It has to be combined with a proper management style, with the proper culture that you create. The whole thing has to come together and gel together. Because just like we said earlier, there's a lot of competition out there, and a lot of companies with deep, deep pockets can come in and throw money at individuals, and they can take.
Yeah, for my part, I've heard a lot about it, but I've never seen it happening. So I've worked in 4 startups, and they all talked about share options, but nobody came up with the real scheme. In PayTabs, we are really working on the scheme, and I hope to see it happening, because I do believe it's a very big retention, not only retention, motivation tool.
And just to give you a quick idea, so technically, usually when you raise on the Series A, if you're coming like from Valley or from Europe, they're going to ask you to carve out about 10% for ESOP. So period. Sometimes you don't even have a choice because they know better than. So carve out 10%, Series A, start giving away. Right now, like for example, we have about 100 employees on the cap table, right? So that gives you an idea on the type of shares that you need to give to everyone. Okay, but then I agree with you.
Correct. We have another question from the audience.
So, I mean, in the early days when you're starting off, the only thing you pretty much have to sell is the dream, because you don't have the best salary and your equity is basically worth nothing, right? So what do you guys have to say about, you know, how do you sell the dream, especially for those very early employees that you got to get on board to actually be convinced that you're not just gonna end up being the reason they're sitting at home? So, you know.
It is a great question you raised. I think you have to look, most of the time, you have to look for believers, what I call believers, and trust me, they're out there. And those believers, when you convince them, when you're selling them the concept, you're selling them the idea. So the first thing, before you sell to any shareholder or stakeholder, you have to do a good job selling it to individuals to come and join you. And those individuals happen to be very well people that are being sought after by a lot of other companies. So you're competing with a lot of companies. That happened to me personally when I first hired our CTO, for example. I had to actually go one cycle after another cycle trying to sell him what ICFlix is, what we're trying to build, what kind of technology we're going to be working on. So yes, once you get that person to be a believer, you've scored with that individual, like they say. Because at that time, like you said, I mean, there's no, whatever shares you give them, they're worthless, right? You can give them the world, but you have to make them believe in the concept and the idea and what they're building, and that will get them going, and that will lead on from one to the other, et cetera, et cetera. So if I'm not a good person selling it to that individual, then I should get out of business. I should not do that business. So yes, and that creates the culture, right? And that's why I said transparency is key. And those individuals that you get at the beginning, the key thing for them is transparency. You have to be transparent and just tell them we're doing well or we're not doing well.
But honestly, like, there is a very thin line. I mean, to come back to, there's a very thin line between a believer and a crazy person. Okay, because honestly, like, whether you're selling to an employee or whether you're selling to an investor, the risk when you start a business are incredibly high. One of the things I look at, especially when you talk, because you have to, as well as you have to think about the return on time, right? We're talking to so many people for recruiting, for money, for clients, anything. So you have to see whether this guy is a believer or is a naysayer. And the best way to look at it, if you're doing this on your own venture, is that try to, like, throw like the biggest problem at him. You know, for example, I don't know, like, we're competing with these guys, and try to see whether you see excitement in his eyes or whether the guy is going to be like brought down by the challenge. You know, like, the entrepreneur looks at every obstacle as an opportunity, while the other guy is just going to be is just going to fail because of X. So this is why you see the people actually we have the higher chance to convince. And then, you know, like 75% of the startups actually get liquidated with zero, right? So the shares are worthless. It's a fact. Okay, only a few startups will actually be able to make money. But it's more than this. A lot of people are looking for a lot more than money. They're looking for meaning. If they believe in what you're doing, they will join. They will join and they will figure it out later.
Yep.
Yes, to concur, for me, it's all about the leader. If the leader can convince you to join the company, it means he can convince the clients to join the company. Correct. And he can convince the investors to join the company. Correct. And this is where you can see that if you are given any shares, they're going to be worth something in the future.
Correct. And at the end of the day, it's you make the value of what you're giving, right? Yeah. So like they say, if people don't buy gold, gold will have no value. It's people that make the value of whatever they have. And that's what we try to give to those individuals. The first people that we hire are actually people that will tend to stay with you for the long haul, and they will go up the cycles with you. And this is the key job of a successful enterprise at the beginning stages of its life.
And it comes back to the skills of building teams.
Absolutely. Absolutely. Do we have any? Yeah, seems like we have another question. This is the last question.
Hi, thank you for the opportunity. I have a question more about the region in terms of what should happen in the region, in Kuwait in particular and in GCC in general, regarding enhancing and accelerating the digitization, one of payments, but otherwise digitization of the whole industry, of the government processes, of the procurement, of any end-to-end process of anything that can be digitized. What do you think is lacking in this region, and what are the gaps that need to be fulfilled to achieve this? Thank you.
If I can take a first stab. I think we are heading to the right direction, but what we're lacking is the creation of a technology high-tech industry. I think as a region, we have a lot of talent. We have a lot of the millennials here are amazing. I mean, the ages from below 30, they're all highly educated. They're all very well qualified. But what we're lacking is companies to come in to start companies and to fund them. I think we need to create an ecosystem of funding, taking more risk into those ventures, and not forget, but just shift money from traditional investments such as oil and gas, real estate, etc., and create a good chunk of investment in technology. Once we get that shift of funding, which is happening, by the way, in place, then you'll see the whole dynamics change. Because we can create a huge industry, like startups like Souk.com was a great startup, Kareem was another great startup, Fetcher is a great startup. So a lot of great startups happening, and a lot of people with great ideas, but what we're lacking is that arm. We don't have 1,000 VC around. We have a very limited number of VCs that are willing to take those risks into companies in that space at this stage. But the list is growing. Once that list grows, I can guarantee you, you'll see a huge industry, not only in Kuwait, but across the GCC and the Middle East.
I don't think it's a problem of money here. I think the most wealth of the world is in the region. So it's not about lack of capital. It's a lack of believing in ourselves.
You're right, you're right.
The money is there, the talent is there, the companies are there, but the investors just prefer to invest in Silicon Valley, local money, instead of keeping local money here and believing in the companies that are here and the people that are making them. And I think that's the real problem.
I want to thank our panelists, Eric, Carlos, and Idris. Congratulations on your businesses. I won't call them startups anymore. And we hope you all the best in the future.
Thank you. Thank you very much.
Thank you to our panelists, and thank you all for joining us today. This was our last panel discussion for the day. We'll be back again tomorrow from 9:30 a.m. In this hall, we will be dissecting digital commerce, and in Hall B, they will be discussing Ad Technology Forum. We'll see you tomorrow, and have a great evening. Thank you for sticking around, and enjoy your night.